All right. Good afternoon, guys. I hope that everyone is having a really good day so far. I haven't posted much videos recently. I didn't see the need to because I posted a really detailed one, which was around 45 minutes long, which is the most recent video that I have on my playlist. So if you haven't watched it, you can go and watch that. It pretty much highlights everything that I'm looking at as of now. It was posted like 3 weeks ago, a bit old, but as of now, it still very much applies to the current market situation. If you haven't watched that, you can go and watch that. But recently, a lot of people requested me to do a new video. Just briefly explain the ASPI. So today, I'm not going to make it too long. Probably a 5 to 7 minute video. Probably, I'll try my best to keep it less than 10 minutes and make it as short as possible. Apart from this, make sure to watch the entire video, and also after I'm done with making this video, I'll be starting my new technical analysis series where I'll be pretty much going through all the basics and the advanced concepts of technical analysis. It will be pretty much a free technical analysis course, so it will go on for a while, since I have to obviously edit the videos and all of that. I'll try my best to post at least 2 videos a week, or at least one, but there'll be at least one video a week that I'll post so that you guys can continuously learn about technical analysis. Let's quickly go through the all share price index. Let's start off with the daily chart. Just ignore this long wick over here. You can call it a wick. Just look at the candlestick. Just ignore this part because it's a glitch on the chart. It literally goes till zero. Just ignore that. I think investing.com will probably correct it very soon. Ignore that part and let's just focus on the candles over here. So as of now, you can clearly see that prices have been trending lower since we topped out at 13,600. A lot of people have tried to pick the bottom. As of now, obviously, like I've always said in my videos, there's no point trying to pick the bottom because no one can really pick the exact bottom. So as of now, the best thing to do is obviously focus on certain indicators, and obviously most importantly focus on price action until it gives proper reversal signal. So let's start off with the moving averages. So let's just quickly put in the 50, 200 and the 20-day moving average. So as of now, you can clearly see that the 20 and the 50 is declining. So that means that overall, over the short term and the medium term, we are in a more declining or bear market. However, the most important thing is obviously the primary trend or the long term trend. And as of now, the primary trend is obviously favoring the buyers because we are clearly above a rising 200-day moving average. So let me just highlight it for those of you who don't know. So this is the 200-day moving average over here, which is this rising black line. So as long as we are above rising 200-day moving average, that means that our primary trend is positive and favoring the buyers. So as of now, if you just zoom out of the chart and if you just look at the price action since the COVID-19 lows till now, you can pretty much consider this part over here and this part over here as more of a correction of a more longer term uptrend. So as of now, that's what the price action is hinting out. As of now, we are in a primary bull market, so we can consider this a correction. Obviously, it's too early to say until we obviously have a proper reversal signal to the upside. We cannot still confirm that we have bottomed out. That don't go chasing bottoms because no one can pick the correct bottom. So as of now, clearly, one thing that we need to see is obviously prices get above this 20 moving average. Now, that being said, that won't obviously be the exact signal of a reversal. There is still more work to be done. In my opinion, I think we'll have a lot of contraction in volatility. Simply put, there will be a large contraction in the daily range. Simply, so if you, for a very simple example, would be the range would be, let's say, on the 10th of March, the range was pretty much roughly around, what was that? It was roughly around 800 points. The range is 800 points. So that's very high that's insane volatility. So when I say contraction in volatility, that means the ranges that we have had so far over the past few days. You can clearly see 100 points, 50 points, 20 points. Those are the sort of price action that you want to see right now. if you want to have a sort of signal that we are creating another base like what we did in January till August of last year. Now you can clearly see that the right part, the left part of this setup over here has been very high volatility. You can clearly see the ranges are very high. There have been 500 point days, 400 point days, and continuously we have had very high volatility. And the moment we move to the latter end, to the middle and the latter end of the setup, we have seen that the daily ranges have contracted to very minimal levels. Now there have been the odd high volatility there, which you can obviously expect, but overall what we have seen is a huge contraction in volatility. The same way, that's what I would like to see today, from pretty much over the next few months as well. So what you would want to see is volume reduce and also the daily range or the volatility reduce as well. So as of now, that's pretty much what I am looking at, and hopefully that's what we'll see over the next few months. A lot of people have asked, when do I expect us to hit all-time highs? I can't really tell you exactly when, but if you look at the historical price action, it's generally been around August when the market really starts to pick up. So generally there'll be sort of base forming between January or the start of the year and until around mid of the year, so until around Jan till June, and then afterwards the market picks up. That has been the trend clearly since the COVID-19 bottoms, and then again the January bottoms over here in 2021 as well. So can we expect the same over here? Well, difficult to say. A lot of people say history repeats itself, but that being said, obviously you need to be a bit more cautious as well. Just because it has happened over the past two times doesn't mean that it needs to happen this time as well. So just make sure that you're a bit more cautious, but as of now I still am firm on my thesis that we might, or we can see a new all-time high this year as well. So I'm still on that thesis until I'm proven wrong. So the way I'll be proven wrong is obviously if we close below the 200-day moving average and the slope starts to decline to the downside. So until that happens, obviously there's still the chance that the overall market is still favoring more upside over the long term. So right, so we have looked at the daily chart. Let's quickly jump into the 30-minute time frame as well. It's a time frame that I am mostly looking at, and also for the amount of people who have been having issues with that long wick that I mentioned on the daily chart, which is this long thing over here, which is a glitch. You can clearly see that if you go into shorter time frames, it's not there. So don't worry too much about that. It's probably investing.com will most likely fix it very soon. So right, so that's at the moving averages that I generally use. All right, cool. Okay, so you can clearly see that since the time that we made this top over here 13,600, we have clearly had a lot of resistance where these two moving averages have filtered out any bounces that have happened. Prices have failed to get above these two moving averages. So you can clearly see not just once, not just twice, not just thrice, but roughly around 6 to 7 times we have seen the same thing. Now again we are seeing it over here. Now what's important obviously from a shorter term perspective is for us to get above this 10,600 level. For me, that's probably the most crucial thing as of now for the market over the short term, is for us to get above this 10,600 level. And a more important level for the market obviously from a medium term perspective is 11,000. So from a shorter term perspective, getting about 10,600 is important. From a medium term perspective, I would like to see 11,000 reclaimed as well. So that being said, again, like I said, there won't be any I don't expect any significant upside moves as of now, because generally when a base forms, like I said, volatility starts to contract and also volume contracts. So if you're worried about low turnover, don't be worried about that. It's natural. If you look at our market, or if you look at individual share, or if you look at a share from another market like the US, India, Germany, Japan, anywhere, you would clearly see the volume reduces as a base forms, where it can be a cup and handle, a cup without a handle, an ascending triangle, a descending triangle. Regardless of whatever it is, generally volume continues to decline until the breakout. So as of now, that's what we are seeing as well, which is perfectly fine. I like to see the volume is decreasing continuously. So yeah, I think we have pretty much gone through the main important things. Obviously, as of now, like I said, what I would like to see is the buyers reclaim 10,600 on the short term, and 11,000 over the medium term. That means, I mean, not the medium term, but over the next few weeks. And then hopefully for us to consolidate around this 10,600 to 11,000 level, and then gradually start to form a base and move higher. So generally, if you look at the daily chart, let's just quickly jump into daily chart before we wrap things up. So generally, a base has been more rounded in the ASPI. Historically, what we have seen is a rounded base, more like a cup and handle. Over here you can see the cup and you can see the handle, and very similarly we saw a very similar setup in the last year's correction as well, where we saw the cup and then the small handle over here that completed the cup and handle formation, very similar to that of 2020. So again, there's a possibility that we might see something very similar like that this year as well. Like I said, I'm still firm on my decision that we might see an new all-time high this year, before we see a proper correction in the market. So again, I can't be 100% right all the time, so I might be wrong this time. So obviously, like I said, be more conservative and also have your own thesis. Don't rely on my information or any other information. Always make sure to make your own thesis first before you rely on public information. So yeah, that's about it from my end. I hope that it was brief as possible, and all regardless, it was still detailed and it explained to you as of now what we are looking at. So that's about it. I hope that you guys will have a really good rest of your day, and good luck for the rest of the week. I hope that all of you guys make some good money off the market. Thanks guys, thanks for watching, and see you soon.